Hey, we are back. It's Friday. It's all about Ask Mbithe. It's a time when we take it down a notch, alafu tunataka kuongea. Hii show ni sababu yako. We want you to ask us absolutely anything that you would like to know when it comes to investments in Kenya. If you're just joining us, karibu sana. If nothing else, say hello to us. Our number is 20146. Reach out to us. Ask us anything about investments. I want us to go right into the crux of understanding Equity Group as a bank which started in Kenya, has had a very interesting history. It's actually one of my favorite history and story tells that I hear about the NSC, and I want to take you through this story. But I want to know this. Do you own equity? Wewe ni member? Ungetaka kujua nini kuhusu hii stock? But let's jump right in and understand what's happening with this particular counter. So the slides are coming up as we speak. We have Equity. How did it start and who is Equity Group? Today, Equity is a bank. It was formerly known as Equity Bank Limited. It provides financial services to individuals, small and medium-sized enterprises. You probably know Equity from a very long-dated story. Bank that started in the 80s was last in the park in terms of having a negative shareholder fund figure. And it was actually at the tail end of its lifeline because the central bank was saying, we will shut you down. It had been making losses over losses for year in, year end. It was a company that had started as a building society, and its objective was to get money for the people in that building society, to extend a debt to them so that they could be able to run their businesses and fend for their families. At this time, when they were almost about to go under, there was a change of management. That's the time Dr. James Mwangi joined in as the head of finance. At that time, late 80s, early 90s, he saw this company and he saw what the company was doing, and he saw an opportunity to turn it around. He moved from being the head of finance to being the chief executive officer. Him and the then chairman were then able to start working together to turn it around. When we look at the history of Equity, these are some of the things that stand out for this bank. Let's put the numbers aside. This bank went out at a time when people could not have banking accounts because you needed at least 10,000 in your account in the early 90s to hold an account. That was actually a privilege for the few. What Equity did, it opened its arms and it said, come, we shall offer you financial services. We will not ask you for 10,000. Put your money in the bank. If you want to transact, we'll charge you a very little amount to be able to transact. Of course, when they went out there, the people were saying, but banks do not want us. And they were very open in their communication and they said, we were about to be closed. We are also down, but we want to get up. And that actually birthed the history of them saying they are a listening partner because they were listening to the needs of their customers, addressing them and opening them up. If you're a little bit older, you've probably even seen photos of people with sacks of potatoes, their farm produce, their dogs, their goats, going to the bank because this bank said, we will be humble, we will listen, and our work here is to serve those people around us. It's a very interesting perspective just to show you that wherever you are, if you decide to change it to actually listen to the needs of the people around you, you can build a business. Now, starting from a point where it was almost number 66 out of 66 of the banks that were there then, and coming to a point where it's number 1 or number 2, depending on the ranking you're looking at, let's track what has been happening and what do the numbers look like. As I had mentioned, it is a financial services provider. Let's see the second slide, which tells us what segments it's actually based in. This company predominantly serves SMEs and individuals. Again, from its history, what it did, it actually figured that most Kenyans don't have collateral to actually borrow. So what it did, it encouraged people to be banking as many times as possible, and it would use the banking records to extend credit. This is a very interesting story because this is a bank that not only focused on the banking environment and the banking customers, but it created its own universe outside the people who are being banked. It created its own rules. It looked at the regulations, it went to amend them and requested for amends because it was the listening and it knew what the needs were, and it was able to use its position as a bank licensed by the Central Bank of Kenya to open some doors. Business segments, as I was saying, SME is one of its strong points, but it has also grown in corporate banking. It's also very well known when it comes to diaspora banking, facilitating inflows of funds from the people out of Kenya, especially the United States, coming back home. Outside of that, if you're thinking about Equity Bank, you'll probably see a lot of outlets. It's always the bank that is penetrating to everybody in the country and trying to be as efficient as possible. It invests a lot on technology, and because of the success it has had in Kenya with regards to technology, it's been able to open up other market segments, and it now operates in Kenya, Uganda, South Sudan, Rwanda, DRC, Tanzania, and is also looking at the country of Ethiopia, starting from Kenya, a village in Kenya, and going out to the world. Let's see what else makes up this bank. These are the people who are at the helm of the bank. Dr. James Mwangi, who is the Group Managing Director and the Chief Executive Officer, has been there from a very, very long time and now is sitting at the helm of this bank. To help him in his operations, he does work with Mr. Polycarp Igathe, who is the Group Chief Commercial Officer, and Mary Omai, who is an Executive Director, a lawyer by training, and very instrumental in terms of strategy and the structures of the dealings of this bank, both in this country and in its regional expansion. Let's see what this bank is all about. When you are looking at the banking sector today, you're trying to go and reach out and find out what are the latest filings by the companies. It's January 2021, but this bank's announced the latest filings for the period ended September 2020, which was the third quarter. A little brief on what is happening in the banking sector today. Just earlier today, the local dailies did state that about 7 billion is the amount of money that Kenyans are unable to pay back with regards to the COVID-19 era and the inability to work and generate income. This number effectively tells you that the banks will probably have to offset some of these loans. But it's not a surprise because last year, at the onset of COVID-19, the central bank, which has the mandate to regulate the banks, was actually very aggressive in terms of telling the banks to be prudent and to increase their provisioning levels. In other words, the central bank was telling the banking community that winter was coming, and it had encouraged them to put up buffers, to create buffers to be able to withstand any pain that would come. So yes, there is pain, but the banks have already put in the buffers to be able to withstand this. What does this mean for you as an investor? It means that these banking stocks are on a low, but the reality is people do need money to be able to facilitate businesses, and anything that goes down will go up. And that is the case expected for equity and some of the stocks on the NSE. I'll talk more about that when we are looking at the price chart. But for now, let's get acquainted with the latest financial filings for this company. Let's see the numbers that came out in 2020. The earnings per share, which is all the earnings that they made in that year, divided by the number of shareholders, were 3.93, which is lower than what they reported in the previous year, 4.59. Let's take a look at the next slide and see what was happening to these numbers and what was bringing them down. So we do have there, starting off with the assets. So this particular company, in the financial statements, it made money by lending. How does a bank make money? It lends money to you. Today, the average lending rate is shy of 12%. So it lends money to you at 12%. But how it gets this money, it has branches all over the country. It collects this money by way of deposits. And for the tier 1 banks, the likes of KCB, Equity and Cooperative, because they're very open to and they have branches across the country and they have numerous members in their communities banking with them, they actually get the money at near zero. The cost of funding, which is the cost of the money that they collect, is about 2 to 3%. They're lending at 12%. They're able to make the difference by virtue of profit, and then they're able to charge the cost of running their operational systems, the cost of technology, the cost of management to arrive at a profit after tax. I had mentioned the element of provisions, meaning that the central bank had encouraged banks to increase that number. And really, this is what made the profitability of the bank and the banking sector in general not as good. But the banks are making money. They've had to be prudent and increase this provisioning number. You can see a massive jump from 1.8 billion in the previous year to 14.7 billion, which would explain the next slide that tells us what was happening to profitability of this bank. As expected, profitability dropped. But the thing is, you always want to pay attention to top line, middle line, bottom line. Top line, is this company making money? Yes. this bank was making money. Middle line, is this bank having too many expenses? Yes, this company had expenses and actually went a step further, increased the loan loss provisions as part of its expenses as it was thinking ahead in terms of what could possibly happen in this and the subsequent years. What does this mean for this company? The profitability in September the 30th, the year 2019 was 17.3 billion. This dropped to 14.8 billion in the year. So if you see the full year numbers, which should be coming out anytime towards the end of February or early March, then you will expect to see a decline of anything between 14 to 16%, give or take. But this is expected. This is already priced into the market. So when they announce a decline in numbers, don't expect any price adversity because the market is already aware of this. So that's 14 billion, the profitability that they reported. Question is, will they be able to increase this number same period this year? Let's see some of the other highlights for this particular bank. We have the net loans. How much has it been lending to the economy? The company is still growing in lending. 2019, it had its loans at 348 billion. 2020, the loans were 453 billion. Very important element to look at there because it shows you that this company is actually making money because its core business is growing. What's happening is the bottom line. So you ask yourself, what's happening with the bottom line? Let's take a look at the subsequent slide and see what's happening to the total assets. All right, so we've missed the total assets, but this company, by virtue of total assets, is just shy of the 1 trillion mark. 933 billion, that's the total assets. So all the loans, all the technology, all the equipment. And that's such an important figure because it tells you that this bank was negative over 35 years ago. But the spectacular story about this bank is when it came back and decided to review its structure, one of the things that it did is every 5 years it doubled its assets, doubled its profitability. What does doubling mean? Every year it had a target of at least 20% growth in the income it was generating, 20% growth in its assets, 20% growth in its profitability. Why is that an important figure? This is a show about investments. You can decide for yourself, it's the beginning of the year. I want my income from investments to grow by 20%. It's doable because if you start doing that, it means every 5 years, whatever it is that you're putting your effort at can be doubling. So that is where it was at. I think the final slide that just came was the slide on price to show you what has been happening on price, which is nothing new. The counter has been losing on price. It started off last year at a price of 54, came all the way down to a price of 28 in August, and now it's at the 36 mark, closed the year at 34.3. But you can see what comes down goes back up, and there is an opportunity to go back up there. But what's important about this slide is when you are also trying to track the price of a company, you want to look at the valuation parameters. For the bank, it's the price to book ratio. You're comparing the price of 36 shillings to the value of the net asset value that this company has. What is the net asset value? It's the money that the initial investors put in, and it has been growing by the number of the amount of profit that has been put aside by virtue of surplus. It has been growing over time. So you want to compare that with the price that you're getting in the market. That comparative is at 1. This is a company that used to trade at 2.5 times. It's a cheap way of getting a good company. 1 times is pretty cheap because the market price and the value of the shareholder equity are more or less at par. If it goes below, then you're buying it at a discount. If it goes above, you're buying it at a premium. But coming from 2.5 highs about 2-3 years ago to 1 means that there could be an opportunity, and especially if you're looking at long term. Point of caution always, the equities, you want to sort of look at 5 to 7 years because there's a bit of volatility in between. When there's volatility, hold strong. When there's fear, try and go in and pick it up on the dips. Did this help you? Are you a shareholder of equity? What is the kind of information you would need to know from us so that you can make that decision? I would like to know. 20146, that's our number. Nimeshikilia Nangos yangu. I hope you can be able to engage with us. We are more than ready to answer your questions. We take a break. When we come back, we take it to the streets. What do people want to know about investments? What do you want to know about investments? What do we have to say about investments? Let's continue to engage after the break.